All right, welcome. Hey, Kay. Hey, Sean. How are you guys doing today?
Hey guys,
Hello, very
happy
well, and
Sunday.
you?
All right, welcome back to the Trading Triangle. We're here for another week's prep of trading, looking at charts. Quick disclaimer up front, as we always do. Remember, we are not trading professionals or financial advisors. We're here to provide entertainment, education value for you. So hopefully you find that useful and helpful with your trading, but mostly just something to enjoy on a Sunday. We have a crazy week coming up ahead of us. I mean, I don't know if you guys would agree there. It seems like just tons of information coming up this week to deal with our trading. So that'll be interesting. And then markets last week overall pretty flat, honestly, except for the small caps kind of coming up to speed. So we'll get into that. But yeah, I think we should dive into the charts. Anything before we get into it, Sean? How was your day so far?
Yeah, it's been good. Obviously, it's 7 p.m. here, so I've had most of the day already. But yeah, got up, had some breakfast with my dad. It's his birthday tomorrow, so that was nice. And then went to the beach for about an hour. So
I'm always jealous. Like I get on here and your day's rolling and you're always energized. I love it. It's good stuff. The beach too. The beach.
Oh, it must be lovely, right? London. What's the weather? It must be pretty hot this week, right? In London.
It is. So it's about 24, 25. But obviously, because it's England, it's very humid, so it feels a lot stickier. But I'm in Thailand, something like that. But
and just for the listeners, he's talking about the centigrade, not Fahrenheit. So
sorry, yes,
Gotta do the quick math. That's good stuff. The beach is something that we desperately need here in the desert.
Yeah.
How about you, Kay? Having a good day?
It's having a good day, having a great day. It's been crazy though, right? The last week was crazy, especially for news for a couple of stocks that we'll go through. And I know we have a lot to cover today, so let's get rolling.
Yeah, I think we just jump right into it, right? So let's do that. Looking at last week's numbers, S&P, I mentioned everything was kind of flat. S&P and the Dow were up just over about 0.4%. NASDAQ was basically flat. The Russell 2K was up 1.9% on the week, so that was pretty nice. A little bit of recovery there. It's up almost 6% on the year, but the NASDAQ's still leading at up a strong 26.68% on the year. S&P behind that 11.96%. And the Dow basically struggling to keep up at 2.2% to the upside. Bitcoin pulled back a little bit this week. I don't think we've seen negative numbers in Bitcoin on a week recently, but down to up. It's up 55% on the year, so still obviously performing well in the year, but it pulled back a bit. We were well above the 60% line for the past few weeks. And then the VIX. So the VIX dropped off by quite a bit this week, got below 14, closed at 1383 Friday.
Exactly.
But Friday it was rising, which is interesting, right? Heading into the coming week. We've got not a ton with earnings. We'll get into that coming up in a minute. But any comments on the performance last week and these names jump out to you guys?
I think Tesla is one. You see 16% for the week, so it's been crazy. Now there was a news for Tesla. I know you guys are going to cover Tesla, but with GM, like few weeks ago we had Ford signing up with Tesla. Now we have GM, and this is just the start of the the other companies, I guess, in the EV space. So that's a major move for Tesla. I just want to touch upon quickly on the fear and greed index because things have been changing recently. So 528 when we met, it was 66. Last week was 65. And the end at this point right now, it's 77, which is extreme greed. You already touched upon VIX. VIX is at the all-time low kind of a scenario. Put to call, 0.74 going in. So that's leading up to why the fear and greed is so high, why the greed is so high. So it's going to be an interesting week next week. A lot of I guess events are going to come together. We have the FOMC coming up. We have the CPI coming up. We have the job reports coming up. And then we'll have the quad witching, which is on the Friday. So,
yeah. Lots happening.
I mean,
nothing for me.
Sorry, Sean, go ahead.
No, nothing too much for me. It's a bit more of a kind of, it was a green week, of course, but as you saw a lot of companies, you can see they're kind of down. So for me, it felt a bit mixed overall, to be honest. Obviously, I had NEO earnings on Friday, so I'll talk a bit about that later on. But yeah, it was an interesting week.
Yeah, let's get into some of these charts here. Oh yeah, earnings first. I have two names on this list, Kay. I'm looking at Oracle Monday and Adobe Thursday after markets.
Same.
About right?
Same. Yeah.
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 How about
There's
you, Sean?
nothing else left in there. Maybe Kroger if you're into consumer staple, I guess.
Yeah, the staples. I'm more curious about consumer discretionary and how well that's going to be performing here. But, yeah. Anything else to add on the earnings, Sean? Kind of a
No, there's not much there, is there? So
Yeah.
I think we're waiting for the next earnings cycle now.
The big earnings was last Friday. We all know that.
Yeah.
All right. Well, let's see here. What else do I want to jump on before we get going? I mean, really, that rate decision Wednesday is going to be the big deal. I wonder if we're going to get a lot of volatility heading into it, or just flatness and everybody waiting to hear what's going to happen.
What's your take, though? Do you think? I know the last I saw was 75% would be a pause. Now, I'm pretty sure that number might have changed by the time by now. But what's your take, you guys? If you want to do a quick round, what do you think is going to be a pause? It's going to be hike? What do you think?
You first, Sean.
Yeah, I think it'll be a pause. I'm slightly optimistic about that because obviously I'm a British investor, that kind of thing, trader. So I always have like the kind of positive side coming out of me. But I think pause would be good for the markets, especially. I think we got a bit of jobs data last week. I don't look into that too much detail really, but it does help the kind of Fed rate decisions of pausing, hiking, that kind of thing. So I'm sticking with the pause.
Yeah, I think a pause is probably likely, but I don't know. I mean, I feel like given the run and where we're at levels wise, and if they're really data dependent, then maybe they keep hiking, maybe another 50 basis points. That's kind of where my head's at. But 25, 50, I don't know. But it just given all of the positive movement recently, and I think the Fed does pay pretty close attention to the stock market. So that's where my head's at.
They do.
Yeah, I mean, I'm also biased towards being a pause, but if the inflation comes off, very sticky, and I think there were a lot of CNBC contributors. They were on the same point that 2% is a pipe dream at the current point in time, and and we are still not seeing the real impact of the tightening that is happening. We saw the bank runs that happened a little while earlier, but things have kind of like stabilized. Fed came in, they saved the day, and then things are back to normal. Now nobody's even talking about recession. It's like everybody has forgotten. It's like in the back view mirror, right?
Yeah, I think a lot of people are saying that AI has saved the recession.
Man, that AI can do a lot.
You can. Yeah.
Save us from recession. Let's hear it. Well, yeah, I definitely. You could put me in the skeptical camp if you want. I am not a typical bear or perma bear by any stretch, but I read the charts and I like to pay attention to the charts and stay true to them and remain as a technician. So, yeah, that's why I'm kind of cautious, to say the least. And here's the SPY chart. I mean, I think it's a great segue just to get right into it.
Yep.
Here we are, right at the prior highs that we want to test out at 432 key level. I saw this funny meme this week. I can't remember exactly, but it was the Braveheart stuff, and it was like at 411. Or 4,000 for the S&P. Hold. 411, hold. Now we're at 432. It's like, go. That seems backwards, right? Like, here we are, peaked out at the highest levels, and everybody's like, yes, let's jump in and push this thing higher. And I'm all for it. I mean, I'm majority invested. I'm not all sitting in cash or something, but I am raising cash because here we are at 432. The candle on Friday that tried to get up there, it just touched the level and was really weak and closed right back down near the open. All week long, we just couldn't quite get there. And then we made this one attempt. So who knows what next week will bring. But with all that news you mentioned, Kay, I can't imagine people are just going to pile in and blast through this 432 level.
It's going to be a tough one because even I know I jumped on the option side, but the put to call is 1.9. So very bearish, it's very standard. Being on SPY, very bearish, but yeah.
Yeah, protecting that downside.
With the news, it's going to be a tricky week, I think. I mean, generally when Jerome Powell starts talking, the market just goes absolutely nuts. Up, down, up, down. Sometimes it's a pullback, but there's like a V-shaped recovery. It's just going to be one of those weeks where it could just go anywhere. I mean, anyone can say that, I guess.
Yeah. Well,
but just watch yourself, I guess.
Yeah. So I guess my big point on this chart is I don't see a huge volume blast through this key level coming this week, given all the uncertainty. And if that's the case, then, for me, when I get to these big levels, right, you want to see it move through with force. For example, when we broke through the 420 level, you can see that big green candle, solidly through and then gapped up the following day. You go back further, you go down the 411 level. It had tested, it broke through and failed a few times there. But once it broke through firmly, got up to 420, came back and retested it, and moved higher. So it's not like it's just going to power right through. And I feel like we're at a pausing moment to say the least. So
at the same time, wouldn't it be healthy for just kind of a bit of consolidation, a bit of a pullback? Because we are quite far above both of those moving averages, the two lower ones anyway.
It looked like it worked out at the 411 level, right? We got that consolidation and then push up. So that does make some sense to me. Yeah. Let's see. We got your chart here next. Looks like you've got very similar chart.
Yeah, I was going to say it's very, very similar. I've got obviously the major support there at 418. And so the range I've got, I was really pleased with myself, actually. I had a bit of a moment where I was thinking, wow, I did quite well there. That range I've got hit obviously at the top perfectly. The previous high back in, I don't know when that is, probably June-ish last year, maybe. Might be a bit further back. Not really much more to say. We've spoken about it a little bit more on this already. But yeah, positive momentum. If it can stay above the moving averages, especially the 20, I think we're doing okay for the rest of the year. Obviously, it's all news dependent as well. So,
nice. Okay, you mentioned that option sentiment. It's sticking in line, right? Staying where we would expect it to be here.
Yeah, I mean, I think we will see a big volume on Friday because it's a quad witching day. And for the listeners, if you're not sure what quad witching is, we will put a link to the video that we produced in our description after this session ends. So definitely go take a look at it. But basically, it happens 4 times a year where the 4 contracts, they expire simultaneously. So generally, you would have the institutions either are going to close contracts, roll contracts, open new contracts. So it necessarily doesn't mean that the stock market will moon or crash. It just means that on that day, which is Friday, you will see a lot of trading. So a lot of open and close that was going to happen. So the volume will go up significantly. So that's something to keep in mind. Unless you like those volatile days, you can trade those. For investors, I don't think much is going to happen. They can just sit tight and enjoy the ride.
Yeah, good stuff. Those 0-day DTEs probably going to go nuts next week.
You know what? I might even give it a shot and try, gamble once in a while.
Oh, there he goes. He's admitting it. I love the honesty, Kay. It's good stuff. So, hey, looking at the Qs, because we have been talking a lot of tech, and Qs have been powering higher and leading the way. And I mentioned up 26% on the year, over 26%, just blowing everything else out of the water. Everybody's talking about the Magnificent Seven and a lot of concentration, of course. But just looking at the actual chart here, the 4-hour candles are kind of highlighting the recent peaks and troughs, I guess you could say, high points and low points. And it looks like maybe we're going to be ranging a little bit here, trying to figure out what direction to go, kind of in line with what we've been talking about. So 346 is the low end of that range, 346.51 to be precise. And then we got 357.44. We peaked out there last week and then retested it twice, right? Only to really kick back and reject pretty quickly. So to me, that's not very bullish heading into this coming week for the Qs. We're talking short term here, the coming week really. But this is the range I'd be looking at. And if we do get some positive sentiment and a break above that 357 level, maybe a retest and move higher, you could take a trade on that retest. I like that, considering a trade like that. But then, if we pull back to that 346 level that I mentioned, look for some support there and maybe trade a little bit higher off of it. Conversely, if it breaks down, The next level I've got is, what do I have here? Almost 340. So kind of clean 340, then 330. But that's what I'm seeing here, is just trying to trade this near-term volatility in the Qs and use these ranges.
Yeah, I like that. What I see on this chart is those lower candles on the left side of the screen. You start to draw a trend line from there to kind of where we are now.
Mm-hmm.
If we broke that trend and then went down to 46, would it break that perhaps as well with a bit of momentum, bit of volatility?
Yeah, that's a really good. I think that's a great observation.
It depends where that trend line goes back to, I suppose. But yeah, it's just an idea.
It does. And I was looking at this morning, and I think you're right. It does go back. There's another point that aligns with this trend line, and maybe I can add that afterwards. It's something I talked about in my newsletter this week. Actually, posted this morning is this trading using trend lines. So I think it's a really good point you're making here. If it does break that trend, even in this shorter term time frame, if we don't go back any further, just use what we've got here, that would be a signal to me that not only are we heading lower, but we've lost momentum.
We shall see.
Yeah. And the funny thing about QQQ is the put to call ratio is 2.01. So for SPY it was 1.9, I think. So it's that you have much more bearish sentiment on the QQQ as opposed to SPY. So yeah.
So
that's been quite consistent. It's been quite consistent over the last few weeks, isn't it?
Exactly.
Bearish sentiments, even though it just keeps going straight up.
Just a ton of hedging, right? So either way, people are losing money. Unfortunately, either you're betting against the Qs, which is not a good bet this year, or you're hedging, and the hedge is not. It's a great risk. I always recommend hedging. I shouldn't talk like I'm not recommending hedging, but you're going to lose some money as this trade continues to move higher. Yeah,
and then just one comment for investors, right? So a lot of people, they invest in index funds, right? So you dollar cost average into SPY and QQQ. I do that too, but I generally stop dollar cost averaging when we have these high elevated levels, because what you want to do, dollar cost average on red days when it pulls back, so that you can gain those few additional points, because when you do that for a long period of time, you will see that your end result will be much better compared to if you just dollar cost average in a robotic fashion every third of the month, for example, right? Rather than that, I think, especially when you're at the elevated levels, I think you should hold off spending that cash and keep it tight. And when those pullback happens, that's when you dollar cost average. That's just how I've been doing it, at least.
And on top of that, you can actually combine that with some very basic indicators like RSI and just a 50 moving average. So every time it comes down and touches the 50 moving average, you might put a lot in, a lot as in like an amount, not a lot, but money. And then if it came down to like a certain point on the RSI, like a 30, very basic indicators. There's videos on that, of course. And then just using that as well could be a good DCA strategy. Just adding on to that, okay.
Yeah, I really like absolutely, yeah. And maybe for the listeners, if you would prefer, I think, Sean, you can probably, we can put together a quick video or something on these lines, right? Both from an investing and trading standpoint, because I think learning these basic indicators is important. It doesn't matter whether you're an investor or a trader, I think.
So it's good to have on your arsenal.
I really like the crossover here. So, you get a lot of folks talking about, I don't trade, I invest, or I trade and I invest, but I don't like to mix the two, because frankly, you can mess up your trading if you're thinking this long-term bias, but trading a short-term trade, right? But conversely, if you are investing for the long term and you're looking to buy positions, you can use these trading techniques, as Kay mentioned and Sean's highlighting, to find the low points, find when RSI is at levels or near the 50-day moving average, to get a little bit more optimal buys. So I do like that. I have my account that I DCA with. I go to cash initially, and then I go and look at it throughout the month and see where I'm going to go buy.
Yeah.
So yeah, good stuff.
Awesome.
The Qs continue.
Qs, yeah. I just need to move my light. I can't see the actual lines. So we have a little wedge that I've drawn. Not too sure if it's too cemented, but actually I think it includes that trend line we just spoke about on your 4-hour one there.
I see that.
The kind of pink one come up underneath there. And I've just combined it with the wedge just because you can see the points of contact on the top there, 3 in the last kind of 4 or 5 days-ish. And if we continue kind of trading within this kind of wedge, you can see a push up, and obviously that'd be great. Maybe a move towards 368, and then likewise if we push down, I'd be looking to touch the 20 moving average first, and if we do break that, by the time we can get there, that might actually touch there already. But if we break that, I'm looking at 337. Just from basic point of view here, 368 and 337 will be my points of target, potentially if we break this wedge.
What's the options looking like on this, Kay? You mentioned that Q's 2.01. Never mind.
2.0, yeah, exactly. So it's much more bearish opposed to SPY. Yeah.
So it's funny because it's funny how my brain works. I start looking at charts and it just wipes away everything else that I was thinking, and I just start focusing on the chart. And my initial thought was, this looks bearish. And so I immediately wanted to know what the put to call ratio was in. Yeah, so 2.01, like you mentioned before. Yeah, I don't have too much more to add other than I do like that you've got the moving averages in here, Sean. That does help with some support levels that could be coming up if we get a pullback. So like 45-ish for that 20-day might provide some support.
Sean, if you can just quickly clarify, you have yellow, that is what, 50-day?
Yellow is the 20 moving average, and the 50 is the blue one.
Okay,
and then right down the bottom is the 200 down
200. There. Okay, so do you also use 20 as well on top of 50? What can you kind of quickly explain the difference between the 20 and 50, and how do you actually use to understand the trend?
Yeah, so the 20, honestly, really the 20, 50, and the 200 are the kind of most popular ones that people use. So a lot of people will trade off of those moving averages. Therefore, if a buy point comes in at that point, and everyone's putting their money on it, most likely kind of move in that direction. Obviously, not all the time, but 20 I kind of use more for day trading. It's good for the long term as well, but for day trading on the 5 minute, the 15 minute, the 1 hour, even the 2 hour actually is quite good. The 20 moving average, but I use it for more shorter term. But the 50, if stock comes down to a 50, as you can kind of see the cues here, they touched a 50 kind of mid-March. If I was a long position, I'd be buying on the 50. I don't really buy on long-term holds on the 20. It doesn't make too much sense to me. But I use the 20 for a short term.
I do the same thing, Sean. Same exact. Okay. Yeah, I trade the 20 for short-term trading and looking for maybe some support or resistance. And the 50 is a much stronger level and more so for the longer term, but obviously use it for short-term trades.
Yeah,
you know, the funny thing. Go ahead.
So the 200 as well is just kind of the ultimate support for me, just to add that on there. Yeah.
I see. I'm thinking of actually now adding the 20-day, especially for the weekly options. If for folks who are thinking of doing weekly options, I think 20 might give us, especially when you have these massive gap ups in the certain stocks that you trade. I think 20 does provide a little bit more because it takes a much longer time for 50 to actually catch up or at least see a trend on longer time frame. But yeah, so I'll do the testing for 20 and I'll probably report to you guys what's going on.
Let us know next week.
Yeah, I like that. What I do with just to add to that real quickly is with the moving averages is, you can put in a number of different moving averages. You might want to even look at the 9, the 20, the 50, 150, 200 day, and just see which, and look at all of your holdings and see which line is being respected. Because some stocks will, or not some stocks will tend to pick one of those moving averages and respect it, right? So it may not be respecting the 20, but it absolutely respects the 50. That's something you can notice and then, kind of clear out the moving averages and pay attention to the one that's working.
Oh, that's a neat trick. I'm going to definitely try it out.
Yeah, good stuff. All right. So I think we get into the individual holdings. I'll hand it over to you, Sean, and take it away.
Awesome. Yeah. So I've got Tesla, Neo, Palantir, and Unity, which has obviously been in the news this week. So we'll start off with Tesla. Obviously here, it looks like a little bit of more of a messy chart, but all I've done is just really zoomed out. So that's why there's so many lines. If you zoom in, obviously it does become a little bit more spaced out. But what I really want to highlight here is this, literally highlight is the yellow part in the top left corner of this picture. You can see that 252 level mark. It could be 250 as well on the slightly psychological side, but that is where we've touched on Friday, and we came down fairly heavily actually from that line. But you can also see my projection line, which you were quite fascinated with, Nate, last week, of the pink line, and it's completely ignored that. Like we said, it could do, and Tesla does do that quite often. But yeah, just looking back at the chart, my key point here is the 20 crossing through the 200. And that's known as the golden cross, or the positive momentum. I think the golden cross is technically the 50 moving through the 200, which we could quite see as well. And that's the blue line going through the red line. But yeah, that's what I want to kind of note this week, is the kind of positive momentum that has gone on. Obviously, the news is helping with the kind of charging going to GM and Ford as well, which will really boost their kind of popularity, as popular as it is anyway, but more popularity and support. The infrastructure, that kind of thing. But yeah, that's what I see. The moving averages looking good.
Yeah, what a chart.
Yeah.
Like, I like that you zoomed out and you have all your levels. Honestly, I know people don't like messy charts, so some of my charts so many lines, but I like it. It shows the key levels here, but you really did highlight the right one. I think the 252 level. What a run.
Yeah, quite the run, and it could always continue as well. You know what Tesla's like; it has made this move before, and what's stopping it? Is Tesla at the end of the day.
You got the direction right. I mean, not as steep of an angle, right? But you got the direction nailed.
I think my license to get rid of that pink line is now well underway. Yeah.
No, I think you should leave the pink line, because let's track it for a couple of weeks and see. Is it like a vertical takeoff, or is it actually going to come back and, kind of sideways trade? Leave it for a couple of weeks and we'll see how that plays out.
Okay. Yeah, I'll leave it on there.
Yeah.
Cool.
Because, we have seen some more stocks recently which have a vertical takeoff. And every time you have a vertical takeoff, I kind of switch my bullish brain to the bearish side, just to I'm like, this is, by the way, as a public service announcement, I hope a lot of people took chances. If you are trading actively with Tesla, I'm pretty sure you should have taken advantage of selling covered calls during the last week, because the premiums were really very juicy.
I'm sure you could sell like 300 strike calls or something ridiculous like that.
Oh,
right?
my God. Yeah, I actually rolled my 250 calls, which were expiring in January of 24 to March. And and I added some more cash. So 250 call, and that's fine. A lot of people get scared that their calls will get exercised. Listen, I mean, end of the day, it's trading. It's like you are taking that risk when you do covered calls. And that's why when you're selling strikes, make sure you take as much comfort, as much buffer you want, so you can sell at whatever price you like. But if it breaks 250, my covered calls will be negative, which is completely fine. We can roll it again, and you can collect some more premiums. As you extend the time, it just helps.
Nice. Awesome.
Yeah. Well, that's quite the move last week. We'll have to see what Tesla's got left in the tank.
Plenty of history there. Fantastic. Should we move on to Neo?
Did you catch the subtle joke there? All right, let me get the chart switched over. Sorry, Sean. What do we got next?
This one. So we had earnings on Friday. It was mixed. It's kind of what we expected. He came out with some more news on kind of the deliveries, etc. But I'm not going to go into that. I do have a video on my channel which you can go ahead and see. I released it on Friday, all about Neo earnings and my reaction. But really, I wanted to look at the technicals. That's why we're here. We're looking at charts. So you can see my blue writing there. Big rejection. For some reason, it kind of exploded on market open. I got very quickly excited, but then realized not really sure why it's doing this. But yeah, you can see why. It's a massive rejection off there. Big top and tail. This is the daily chart as well. So it's not even like a 2-hour chart. We do have some massive price action here. So it kind of touched up to kind of 880, didn't it? So, and then came straight back down. And I don't see positive momentum for this stock just for this move alone. And that's all I'm going to really say on this. I can go on for hours on Neo, as you know. I have done in the past many weeks. But rejecting off the 20 and the 50 and all of these resistance lines, I see it kind of going down in this channel that I've drawn towards that kind of, maybe not $6, but kind of around $6.50 would be my kind of, should we say, prediction, even though it's not financial advice we mentioned at the beginning. But yeah, that's kind of what I'm thinking. Do you have any thoughts on this, Nate, on this chart?
I actually have, that candle you mentioned on Friday, that big spike. What that actually looked like to me, not right out of the gates. I know, I couldn't predict anything, but now looking at it in hindsight, that looks like people covering their positions. So I don't, or maybe I have that backwards, but it just looks to me like this is going lower. I'm with you. I don't see any reason to get too excited. That big rejection. I mean, so if you buy up, yeah, I don't know. Maybe I've got that wrong. Maybe I'm overthinking it. But as far as people piling in there, I'm just trying to think of the reasoning. But I want to say it has to do with just covering trades. Maybe I can follow up on that a little bit later today. But yeah, I'm with you. I actually took a short position in NEO for the very near term, trying to collect some cash here, and we'll see how it plays out. But I'm following your wedge.
Yeah, that makes sense. I mean, you can see also just the trend line it respected as well. It's just not looking great for NEO. I'm not going to keep repeat myself. Okay, any options data on this one?
Option is very
negative?
bullish actually. Yeah, option is very
okay.
bullish. Yeah, you have 0.51 put to call. But again, I mean, we have been repeating this for a while now. Stocks that are retail favorites generally have a favorable put to call ratio, right? So they are always more call options compared to put options. So when you're dealing with stocks like, let's say, Apple, Microsoft, Amazon, that's where the institutional players have a much bigger play versus retail side. But when you're looking at SOFI, PLTR, NEO, these are retail favorite stocks. So generally tend to have a lot of call options because people do gamble with their call options a lot, especially in these stocks.
Exactly.
Sounds
we've
like,
had sorry.
I was gonna say, just like what Kay was talking about earlier, using the 0 DTTs this week. You got some gamblers out there.
Exactly. If it can hold this $7 mark, I'd be very happy, but I'm not so optimistic. But yeah, in the next picture, we've had a few questions in the past about does it really follow Tesla and the kind of automobile kind of EV market, should we say? Does it follow that? And I posted these two photos, and the HSI, if you don't know, is the Hang Seng Index, which is the Hong Kong stock market, basically. Nice. And I've done the year out. I was going to do the year to date, but Tesla was ripping so much, it just looked a bit too, hard to believe. So I went a year out, and you can kind of see it does move a little bit. But generally, you can see the shape of the lines, if you can go there, on the right side, so the NEO HSI. From the turn of, since really November, you can kind of see the shapes of the lines. They kind of do meet, like the little peaks and the little drops. They kind of correlate with each other. Obviously, the amounts are different. That's why the lines are so far apart. Whereas NEO versus Tesla just doesn't. I find the peaks and the troughs to be quite different, sometimes opposite. I'd like to get your guys' feedback on this. If you see anything different. Obviously, I'm a couple of pair of eyes. It's nice to have 6 pairs of eyes. Well, 3 pairs of eyes, I suppose. Yeah.
You first, Kay.
No, I think what I was thinking. Maybe it might not be a bad idea to actually put a couple other EV companies as well, and let's map that out and just track it just for our purposes because they do follow. And the problem with Tesla and NEO is the price range is massively big. Right. And but they have strong supporters, right, from a retail investment standpoint, not so much on the institutional side, considering NEO is a Chinese company and we have a lot of geopolitical tension with with China and United States. But I think it might be just for our trading purposes and for the audience, it might not be a bad idea to have a chart where we see Tesla, NEO. We can even throw GM, Ford in there just to see how they track, and even a couple other like Polestar, Lucid, Rivian, and see how they track. Maybe we might find some correlation between the non-Teslas and Tesla.
Yeah, that'd be interesting to see.
Yeah, that'd be great if you can pull that in, Sean. Yeah. What I'm seeing here with the Tesla and NEO is clear divergence since about February, March, and I'm wondering if that has to do with, I don't remember the exact timing of the China reopening, but since then numbers have been lagging what expectations were, like some big reopening and big push for additional demand out there. And I don't know if that plays into this at all or not, but it definitely looks like the two are going in opposite directions. So if you pull in like the Fords, GMs, that would be very interesting. I think it's a great idea.
Yeah, that's good. No, it's just more of a sector momentum wanted to pull up. I think I will add some more in there, that's for sure. We'll bring it up next week.
This is a great look. Thanks, Sean.
That's all right. So yeah, we'll move on to Palantir, and of course, I've got a big green line this time at $17, and that's because you can see this. Oh, sorry, I should have started with this is the weekly chart. So I took a little bit of a step back. Everyone's looking at the daily, everyone's looking at the hour chart because they're very, very excited about the very near term. But I'm more excited about the long term. As you know, we kind of bought on Palantir. But yeah, so we can see a big rejection off that $17 mark, and that was to be expected, at least in my opinion. Just because obviously the stock has massively run up in the last 5 weeks. You can see 5 candles there, bang, straight up. What I would be key to look at is the support. I can see it about 14, thereabouts roughly. So if we can trade between 14 and 17 over the next, well, basically until the next earnings report in August, that would be the ideal situation as a Palantir investor. But likewise, if it does come back down to 13, I'd be more than happy with that as well. Gives time for those moving averages to come through. But yeah, that's what I see on this chart on this week.
That is quite the reversal. You could call May is now the month of Palantir or something. Like that is the whole month, right? Just straight up. If you sold in May and went away for Palantir, you missed out big time.
And just to add on to all of this, the volume down there, 5 straight weeks of very high volume. So the volume's there and it's staying around by the looks of it.
Yeah, sustained volume. That's huge. I mean, would you agree, Kay? That to me is maybe the biggest thing on this chart.
I agree. I think the volume makes a big difference. Again, the put to call 0.61. And I want to just quickly touch upon next week's open interest. So on the call side, you have almost 40,000 call options expiring at 16. And then on the put side, you have the highest one is 20,000 at 11, which I don't see how we can go to 11 from these levels unless I'm completely missing it. Yeah. So
never say never, Kay.
It could always happen.
No, exactly. I mean, yeah. I'm not saying never, but I'm saying for the next 5 days, it seems. I mean, unless we see a massive drawdown in the market, which could happen on Wednesday, right?
Could happen on Tuesday.
So yeah, exactly. Yeah, but at least from an open interest standpoint, it looks much more bullish. There are a lot more call options, and which kind of relates to the ratio, which I said 0.61.
Yeah,
go ahead, Kay.
Go ahead. There you go ahead.
Well, I was going to say I don't know if you mentioned this specifically, but that 1420 level that we broke above, that was prior resistance, right? You can see the rejections multiple weeks in the past. And now that we're firmly above it, it looks like we had a week of indecision. Like, are we going to hold this level? Then last week is like, yeah, we're going to hold it. We're going to press higher only to pull back, right? But it did close, well above that 1420. So maybe that is our new support level to really key in on.
Yeah, I did touch on that with the 14. And what people sometimes don't realize with those weekly candles, you can see back in the, I don't know when it is, maybe early 2022, you can, within those candles, there will be hourly candles and 2 hourly candles that will be hitting that point on multiple occasions. So it's not just touching this at 5 times, it could be touching it 12, 13 times potentially, which makes that resistance point even stronger, which therefore makes the support line even stronger.
Yeah, it's a great level to watch.
14 for Palantir. Fantastic.
14 for Palantir, yes.
Write that one down.
Noted. All right, what's next? What do we got?
So yeah, this one we have Unity, and this one it's news based, of course. News beats technicals all day long, and you can see that on Monday. They had a big partnership with Apple with their new Vision Pro. Obviously, it was the biggest hype of that. Well, basically the whole week. The Vision Pro is taking over the world. Mark Zuckerberg not very happy, bless him. But that's for a different show. But from basically on a technical point of view, you can see my yellow arrow there. And I'm really looking forward to this 20 moving average crossing 200 and staying there. And you can see it tried it back in March, and it wasn't so successful because it came straight back down. Probably you can see that related to earnings with the kind of red E at the bottom of the screen around that March symbol. But actually earnings has been quite good. I did a little bit of research into the company this week, so obviously it came into the news. So I thought I'd dig a bit deeper. And so they're looking to be profitable by the end of the year. Obviously, a lot of companies are saying that at the moment. Of course, that's where the company's looking to go. So that's kind of good news as well towards the end of the year. So maybe it might be one to look shortlist. Do your own due diligence, of course. It's just a suggestion. There's no specific trade I'm playing on this, but I just wanted to bring it to people's attention that the technicals look good. It's broken the trend line. It looks like it's stayed above the trend line. If we can trade in this level of 34 to 42, that'd be fantastic. I don't know what you think about this chart.
Yeah, I like the range here. Looks like you've got it identified pretty well, Sean. I'm curious if it just ranges, like if we're really dealing with, it looks like the same kind of angle of increase when we were back in the start of 23 up through March and that nice climb. And now it looks like we're kind of building the same type of, incline and repeating the process. So maybe it pushes, again, back up through 40 and retest that level. And, maybe we just keep ranging for the time being. But that's my immediate thoughts here.
I would also like to see the volume stay up a little bit, because you can see it's already dropped off.
Yeah.
But that happens with these big news events.
Yeah, and then it's not a great options play. The option open interest is in few hundreds, so something to keep in mind. But I do see you kind of touched upon the RSI is overheated right now. It's almost at 68, 69. MACD is still on the incline, so we'll see if that kind of changes the signal as the next week progresses. But yeah, we'll touch upon Apple a little bit later for folks who are on the call. But yeah, I think I like this trade, but I would be careful getting into it from an options perspective.
Yeah, it's just one to watch, I think.
The break, that's a trend line you drawn there, right, Sean?
And that goes back all the way to the kind of top left of the screen, that kind of peak up there as well.
Yeah, so it is positive that we're breaking that trend line. That is definitely worth. I see why you're bringing this to everybody's attention. It's worth watching.
And that's why I was to highlight the 20. If that moves through the 200, then we're kind of starting to gain that momentum, that trend change, potentially.
I like it.
Awesome. Yeah, so that concludes my set. I'll hand you over to the wonderful Nate.
Hey, I'll take that intro every day. Thanks, Sean. So jumping into NVIDIA, I definitely think we've got a range established. Looks like 395 to the upside and 376 on the lower end of that range. These are the hourly candles, and really it's highlighting on the far left side of the chart the huge run, the huge spike, the pennant that formed, and then a continuation up to 420. We've pulled back pretty nicely since then, and kind of noticed that the top end of that range is right around the top end of that pennant that had formed, and the bottom end is where we've gotten some support. So I think that maybe 370 is a good stop loss if you're going to use 376 for your support level. It's pretty tight though. I mean, for a stock at this price point, 376, a $6 stop loss is pretty tight. But at the same time, this seems like a good range to trade. And if it does break below that 370 number, there's not much there to help it prop back up, and it could drop pretty precipitously. So my thoughts here are when we get back down to that if we get an opportunity around 376 is a good short-term trade, and then taking profits at 395 and just kind of use that window until it's no longer working. Would you guys like to, Sean, do you range trade much? I don't know. We've talked about that too much.
I don't know. I prefer to breakout trade. So this range that you have here, I'd be looking for it to kind of break out essentially, and whether it be up or down. So if it comes up above 395, which it kind of did actually early on in this chart, just before the halfway point, and up to kind of 404, come back down, retest the 395, which it kind of tried to, and then push up towards 420. That would be my kind of entry point, the first pullback, should we say, and then enter and go. But I'm not a range trader. It might be different with options, of course, but for me, it's obviously shares based. So I don't have that kind of premiums and that kind of stuff with it.
Yeah.
No, I think that's great perspective to just kind of add breakout trading versus range trading. It all works as long as you know what you're doing. You stay consistent with your plan. What would you say, Kate?
So what I'm noticing that we had this big gap up here, Nate. I'm not sure on the daily chart. I'm looking at what 347 was back in November, and then we have the 365. So I see this break, right? If we see a downtrend, it will be interesting to see how it fills that gap up. Option side, it's 1.02. I mean, it makes sense that it's kind of a 50-50 right now, on both the bulls and bears. I think now folks are kind of trying. I, I think the AI hype is kind of dissipating, or at least taking a back seat now, because a lot of companies, they played the AI card during this quarter two earnings. I think there was some random CNBC comment. I think there was like a 550 times companies use the word AI during earnings.
Wow.
And I know Sean said about the NVDA, we have GitLab coming up. But yeah, so folks used the AI hype. Now what? Because remember, market is always future looking. They're always looking forward. So now with AI out of the picture, what's next for the market? You can't play the AI hype every single week or every single quarter. What's next? So it's going to be interesting.
That is a trick with hype, right? And when you get these big runs, is it has to continually, you have to have new news coming out every week, right? Saw that with the crypto space. They constantly had new news coming out, new coins, new abilities, just all kinds of stuff. And then once that innovation, so to speak, stopped happening, there's less to run on, and then you really have to focus on fundamentals, and everything changes.
Exactly.
But yeah, so we'll see what happens with NVIDIA. Another range that I've been trading quite a bit and talking about is with Marathon Digital. So nice segue to crypto. And I've been loving this trade. I keep talking about it. I'm going to keep talking about it till it doesn't work, because it has been so consistent. This is actually zoomed in, but this range here goes back even further. These are the 1 hour candles. And what I did here was just kind of highlight that uptrend, that upswing, the dotted line that I've drawn in green here. That is the exact same line duplicated. Like, I didn't draw these individually. I drew the first one, I copied it and pasted it into the other two runs. And it just shows you how consistent these upswings have been. They look like they stretch over a course of about 2 days, 2 to 3 days tops. And so it's a quick move that happens. So when we do get down into the buying zone at the bottom end of this range, right around 9, I like accumulating below 9, between 850 and 9. But we might not get all the way down there, and then it tends to take a quick move to the upside. So that being said, it can pause right in this mid-range around 946, 950. So you don't want to go chasing necessarily. But again, a nice trade and something to consider given the consistency here.
This is probably your favorite stocks, isn't it?
I'm going to tattoo this one, I think.
You might as well at this point.
No, even Nate got me into Mara. So I'm like religiously sticking to the 8.5 cash secured put strike price. And I mean, I think safer than sorry, but I'm happy to collect at 9 as well. I mean, seeing this range, I think
that's fair, Kay. I think 850 is a little bit more conservative, and I think that 950 is a little too tight, right? Like, I would not. I think we even talked about 950 a bit last week, and it felt pretty good because we had some nice moves up. But I think that you're right. 9, you could probably get a little bit more premium sell and cover calls there. I like that.
Yeah. So my honestly, for me, the goal is to let the 850 expire every single week. If I collect $20, it's fine. It's my cash is sitting there anyways. But if I can collect $25 every single week without getting exercise, I'll take it.
Yeah, 100%. So when this breaks out, Sean, we will let you know.
Yeah, more breaks down. More breaks down.
Yeah. Either way, we will highlight that so Sean can make some consideration.
I was just looking on the kind of the longer term. The 860 is quite a good support, isn't it?
Yeah, absolutely.
We've spoken about it before in previous weeks, and you can see it in this chart as well. That kind of 1 hour candle dropped down to that kind of 850, bought straight back up within an hour, obviously.
Yeah, and I actually had that circled as like buying opportunity before. I should have left that. It's exactly right, though. It's a quick buy. So, all right, good stuff. It continues to be my favorite trade, no doubt. Right behind that, though, right behind it is DraftKings this year. Continuing to make moves higher, but definitely slowing that down just a little bit here. Let's see here. So DraftKings, had the big push after earnings, pulled back into the buy zone that I noted. And what I'm highlighting on this chart are the trends that break and see a new high follow. So, you saw some consolidation, pulling back into the buy zone. Once that trend line was broke, we moved higher, got above the 26.13 level, and then started pulling back again, all the way back into the buy zone, actually. So I made a little bit higher low on this, on these 1 hour candles. But again, once it broke through, it just took off and back above 216. So now we're pulling back. We've got another trend line established, a little flatter this time around, and we'll see what happens. But effectively, I'm looking for it to break this trend line and make another new high following to continue the pattern. And I think that's a decent trade setup here. Any thoughts to add?
It's a nice channel, and I remember last week saying it could be potential head and shoulders, and it's just done the opposite, really, hasn't it? Around that kind of 24 level at the beginning of the week, you can kind of see where the head and shoulders would be, but it moved straight through that, went up to 26, and it looks like it's just ascending channel, really. So I've been looking for it to kind of hold that and move on upwards. Yeah,
I like the channel. Yeah, the trend definitely seems like once you draw these lines, it just starts making more sense because you can clearly see it just follows the same pattern.
Yeah, exactly. If you're getting stock like that, then you're in for a winner, aren't you?
Yeah, this is my favorite part of trading, and why I like being a technical trader is identifying patterns. It's almost like a game, right? And something I enjoy. So that's I'm really glad to hear you guys say all these things. It really lines up and with my thoughts here. So getting that confluence is great. Just be patient, right? Don't force a trade. Don't say, oh, it's going to break this trend line, so I'll get in now because it's cheaper. I mean, yeah, it's nice to get in at 24 if it does break the trend line and push to 27, 28. It's equally as good, or a little bit less good at 25, 50, right? If you're waiting for that to get to the move to the upside. But what you're not considering if you're just looking at profit potential and price is your risk, right? Way more risk taking an entry right here than if you were to wait for that trend line to break. So that's definitely
when I started trading, and the breakout trading was awful for me. I used to try and get in early, try to get greedy in the first few months of my trading. But now I take the time, I'm patient, watch it go up, come back, retest, enter there, set my stop loss with low risk, and then hopefully off it goes. But yeah, always stay patient and stick to your rules and keep learning.
Do you have a hard time? This is the thing I have the hardest time with. I'll see the breakout happen, but I don't wait for the candle to close. And it's not really a full candle. It hasn't closed, right? It could break through and reverse and pull all the way back, and then it's not a breakout at all, right? And so to your point, you have to wait for the full close, the retest close, and then the breakout, right? Do you struggle with that at all, Sean?
I have done, most definitely. I like to think I've evolved from that a little bit, but it gets us all. The emotions are always there, aren't they? Of course they are. You think, oh yeah, I'll do it this time, it's fine. But it happens on a very rare occasion now, which is great to see.
That's exactly right. And I just think it's important to highlight that kind of stuff, right? It's not like I just woke up and knew how to trade. I made all of these mistakes along the way, and every now and again they sneak back in. So
no one's perfect, are they?
That's why you have the fear and greed index, right? You get greedy.
The most simple options trading phrase I've learned, and it's really one to stick by, is puts on the pop and calls on the drop, right? You just play the opposite to some degree, and it tends to work out well. That being said, when you get the breakout, you got to trade the breakout. So I love these segues this week. I don't mean to do this, you guys.
You're getting better at it. That's what you're just getting better at it.
You're secretly planning it. I know you are.
I spend hours on this. I spend hours on the chart, 0 time on the run through. So it's so funny how that works. So anyways, IWM highlighted this last week. I hope everybody paid attention, and if you were able to get in and take advantage of this trade, congrats to you. I was able to get in and make some good money this week on IWM short-term trade, and I'll tell you exactly how it went down. So last week, Sean, you made the excellent comment that this is a great start, but not an actual breakout, right? We still had to wait for a little bit more information, and that's exactly what we got on Tuesday. We had a retest, and you can see that lower wick, the bottoming tail bouncing off of the 179, and that is where I got a little bit bullish and said, okay, I think we got support here. I'm getting in. And it rocketed right to the 187 in 2 days' time. Really nice trade you can make there. And now we're kind of settling in and seeing what happens at this 187 level. I did draw a little bit of a trend line there to show that we're holding that and want to see that continue to move higher, to continue these gains. But I think it's kind of tough at this point. I wouldn't be as excited about a big trade in IWM right now. This is more of a wait and see type of spot, but a great trade last week.
That's
Yeah,
awesome.
definitely a wait and see, isn't it? I think the move has already happened. If you've got gains on that, then fantastic. But with the high macro news events kind of coming up this week, is one to potentially just stay away from for now.
Yeah.
In my opinion.
Yeah. So it's the same as SPY and QQQ. It's you keep the same. Yeah, it's gonna get impacted. Yeah.
I will say, on a broader positive note, I've been sounding probably a little bit bearish in the very near term, but this is a positive sign. The small caps breaking out of a consolidation phase when we're trying to get a bull market to take effect and move higher. You want to see small caps cooperating, and if they're leading the way, even better. I don't think they're leading right now by any stretch, but you want to see them cooperate and follow suit, and maybe even catch up to the tech trade would be great.
So from your experience, Nate, is this people diversifying and potentially going a bit more risk on if they're going to smaller caps?
I do think that that's a fair statement. There's more risk on if you're getting into the small caps here, and it's definitely more of a bullish trade for sure.
Interesting.
Yeah, if you think about it, the small caps, it's a large number of stocks that make up the the consumer economy to some degree. Like it really speaks to the health of the economy and how well these businesses are able to maneuver in the current environment. So when you see them breaking out, it's definitely a positive sign in my mind, anyways. The volume too is not bad. No,
I think that's a fair point because even last week you kept hearing that only 7-9 stocks on the index are actually pulling the market, and when that happens, if you have a break point in one of those two stocks for some reasons, it will pull the entire market down. But if you start breaking out where you see the small cap and the mid caps also pulling the market relatively, when the pullback happens for larger stocks, you wouldn't see those big drawdowns as you would see with, let's say, Apple crashes for some reason. It will take the whole market down because the market has been propped up by Apple.
Yeah, I totally agree, Kay. So that's good stuff. Hopefully you guys, again, got in on this trade last week, and we'll see what happens with all the crazy news this week. But that is my last chart. So, Kay, I will hand it over to you.
Beautiful. So as you can see, I have made the now it's a pink candle instead of a red candle. So I did some modifications in my color coding. But anyway, so
it's helping me, Kay. This is helping me. I love it.
Perfect. Beautiful. So big event, Vision Pro. That was the talk of the town. That was the whole week. I think the Wall Street is still digesting it. We saw this big breakup at 184.95, but you can see that it couldn't hold up, right? It just pulled back. The whole hype around the product. And now I think it's trying to find where should it go, because you are already at the all-time high for the stock. And then we didn't see that massive breakout that you saw with a stock like NVIDIA when they talked about AI. We didn't get that kind of a reaction. With a $35 price tag, $3,500 price tag on the Vision Pro, it is not something that you will see the mass adoption in the first year. It's going to take a couple iterations before it really is adopted within the larger consumer base. We saw Mark Zuckerberg came out. He took few shots at Apple as well. But hey, this is all fair in this corporate war. Couple things that is very interesting now. What I'm seeing is the 50-day moving average is 149, and now because we didn't see that breakout, it kind of starts seeing, and we are at 68. So you are the RSI is 68, which is also very elevated, right? So the buying pressure. Interestingly, now where does the stock go from here? I think the next, if the drawdown happens, I will target the 171 level likely, because that's on the Fib retracement. And then, as you can see, the volume has started dissipating a little bit. That was obvious that would happen with Apple. What do you guys see? I mean, from a put to call, It's 0.84, so kind of bullish. On the call side, we have 110,000 call options expiring at 185 next week.
Whew.
110,000 with quad witching. And why that is happening, which makes complete sense, because Apple is one of those stocks that is held by majority of institutions, right? It's QQQ, SPY, those has a lot, and a lot of ETFs, a lot of mutual funds have Apple, so it makes complete sense. On the put side, you have 92,000 put options expiring at 165. So at least from the chart, I don't see it pulling back to 165. I think 171 looks a more likely scenario, but if it can break that 184, that's why you have 110,000 calls at 185. What do you guys see?
I'm with you. Go ahead, Sean.
No, you go first.
I was gonna say the 172 level. I'm with you. That looks like clear support, and I'm always impressed by these fib levels. Right? If anybody's not familiar with Fibonacci levels, what Kay's done here is he dropped from the low point to the high point of the chart, and just looking at this, I mean, the candles respect these levels so well. So 172, you can see that there's some consolidation there before moving higher. And then if we got a major drawdown in the market, so I'm talking a little longer term, that 50% line is always one to watch, and that's at 154 roughly. Mm-hmm. And you can see where that was resistance before and would provide some nice support. So yeah, I love using the fibs here. They look like it works really well here.
Just a question, Kay, with the fibs. Do you use on every single stock, or just the kind of bigger ones and the indices?
The funny thing, you asked that question, I actually use fib on every single stock. That's how I actually first get the idea on the range. And then if it's completely doesn't make any sense and the chart is completely off, that's when I remove the fib and I try to draw the resistance based on what I can see. But I think fib really works well on most of the stocks. In my case, I trade large names, mega caps. So on option side, so the fib just works well on those very well. I haven't tried. It works on SOFI also, by the way. It's not a mega cap.
I think if you have good volume, right?
Yeah.
If you have good volume, you get enough data, it tends to work.
Yeah.
Awesome.
Cool. All right. So that's Apple. Next one is Google. And Google is a very interesting chart. I think we have been, again, I'm a big mega cap fan. So Apple, Google, we cover every single week. I feel like it's forming that, support level at 122. This is now the 122.23 is the high from the last year, August. And then the 131.55 is the high from April of 2022. So we couldn't see, the AI hype was not able to break that level. So I'm probably going to change the fib level. I'm going to move it up to 129. So you'll see a little bit of variation in the next week's chart. But I think right now it's trying to find the next catalyst for the stock to move. Now, I generally trade based on the news as well. So I'm more of a sentiment kind of a trader, if you want to say that. See the sentiment, see the news, and then plan the breakout. Then plan the trade. AI hype is kind of the backstage now, right? The earnings are over, it's done. The 50-day moving average is 112. So that could be a potential retest of that level. MACD is starting to curl as well. Mm-hmm. So with that said, the put to call is 0.76. So still very positive. Next week, we have 36,000 or almost 37,000 call options expiring at 125. You have about 14,000 at 120. So definitely you can see that there's a lot more bullish action. This is also held by a lot of ETFs and mutual funds and index funds. So again, a major name for these companies. What do you guys see?
I see a gap. Do you see that gap, Sean?
Yeah. I see that.
I see it. Yes, I also see that this support line is very, very critical, shall we say? That we're sitting on now. The 122.23 that Kay was saying. Yeah, it's it looks like it's one to hold if we can. Like that meme you said earlier. Hold on.
Yeah, it really does look like it's trying to hold here. I agree.
And and the gap that you mentioned, right? If it drops to that gap, that will be touching the 50-day moving average.
That's
Ooh,
exactly,
yeah.
Get out of my head, Kay. That's exactly what I was.
Looking
So
at
that's
that
a
one.
very interesting point of gravity there. But I think that, like you guys said, just to kind of beat the horse a little bit, 122 needs to hold. I don't think 116 is the strongest support level there. Obviously, a little bit of stalling out. So if it doesn't hold that 122, why not fill the gap, retest or test the 50-day and see what happens? Seems to make sense to me.
Yeah.
Also, if you have that 50-day, if you drew a trend line from the recent low back in, I can't figure out what it is, but if you drew that trend line, it kind of follows to 50. That's another point of confluence as well, kind of backing up that support.
Yeah, I was actually trading this on a weekly basis, Google, but I kind of stopped once we had this big gap up here. I kind of pulled back because I do cash secured put. So I want to actually see if it can come back to this and touch this 50-day moving average. That would be a good entry point for the CSPs again.
That'd be ideal.
Cool.
What do we have next?
We have SOFI. That's the next one is SOFI. This is another beautiful gap up chart, I guess. It's up 14% in 5 days.
That's insane.
The RSI is 83. So I don't know what else you can call overheated. This is the classic definition of overheated. The 50-day moving average is 5.85. So if it's a pullback, it's going to be a major pullback there. We had this big gap up. Of course, price is elevated because of that. What very interestingly, I think I forget which chart you were showing. We have this big, massive wick that you can see. Now, generally, when that happens, right, it kind of shows that the buyer stepped in to push the stock higher. But then eventually the sellers won that race, right? And then that kind of tops up at the 824. So it still has not been able to break that February high. So next week is going to be very interesting with all the options expiring, all the news happening. Can it break the February high? And I think if that is going to be a very psychological level for the stock. If it can break that, we might even see new highs for SOFI. Otherwise, I think I'm going to keep that the rectangle shape that I have there. I feel like it should come back to those levels for trading if we see a substantial pullback. Like your Neon, like your Palantir, 0.6 on the put to call, very positive. By the way, you have to look at this. Next week, at $10, you have 15.8 thousand. So 15,800 contracts on the call side expiring. Can you guys
what strike?
at $10?
I thought you said 10.
Yes.
Okay.
I want both of you to guess. For the put side, I'll give you the number at $5. Can you guess the number of contracts expiring next week? Just take a wild guess.
How much would you? I was gonna say none.
$5. None. Okay. How about you, Sean?
None. Yeah, I said none. Yeah.
It's 81,000 contracts expiring at $5.
And 100,000 at 10?
No, 15,000.
Oh, 15,000 at
Wow.
10. 80,000.
Exactly. So
that's interesting.
I don't know what to make out of that data point, but it's just interesting when you see these data points. You're like, why are so many contracts bearish on SOFI? So something for the folks who are listening or who will listen later. If you trade SOFI, keep that data point handy, track that, and see how that plays out.
It's interesting you say 10 because when I've looked at the chart as well, because I've been tracking it recently as well for trades, if there's not much in the way from this point, once it gets past this resistance point, of course, it's not much in the way to 10.
Yeah.
And probably why you're seeing that. And that's quite a big jump, isn't it? It's about 23%, something like that, off the top of my head.
On top of the 14% that they have already done.
Exactly. Yeah, exactly. From that $8 level, that's still quite another push. So, and that's what happens with retail stocks sometimes, isn't it?
Yeah. I was going to say, so the chart overall doesn't look too bad, right? I mean, we're making a higher low and higher highs and all of that. But you mentioning those $5 strike puts, is this just people, like I was trying to mention earlier, this, euphoric rise here. Are folks trying to cover their positions?
Well, there could be a couple things, right? One is because it's a quad witching when most of contracts are expiring. So
Yep.
a lot of premiums are on these kind of dates, right? Like for example, I have I think 7 contracts at $6 expiring. So I closed those contracts out because when we had these massive gap ups, I made enough. I had like 95% of the cash secured profits I captured, and I closed my contracts. So there could be people like that who have a ton of ports open at $5 on CSPs. Now it's very hard to decipher whether it's a CSP or just a pure put option.
Either way, someone's buying that call on the other end, right? Or
Exactly.
that put on the other end, excuse me.
Yeah.
So, but yeah, the fact that we got the higher high, though, I mean, back to the chart, just to comment on that a bit, Kay, the higher high this week was really good to see. Even though we didn't close above it, it showed there's some appetite there. And it's just an incredibly volatile stock. So that option information is interesting heading into quad witching. I would not be surprised if we got a bit of a pullback, and if we did, it would be really nice to see that 670 level hold. And I actually like accumulating between that 650, 675 kind of level if that happens.
Yeah. I mean, if it gets a pullback, I'm back to opening CSPs on SOFI.
Nice.
Yeah. Sean, anything you want to add on before I jump to the next one?
Well, yeah, just my buy zone is 650 to 7. I've just gone back to my charts. I thought I actually put a buy zone out, and I did. It is 650 to that 7.
What did
so
I put?
Similar sort of area.
Yeah, perfect. So same. Yeah, it's pretty similar. 624, 671 is what I expect it to range. Okay, cool. All right, moving on. This is one of my favorite stocks for running weekly and bi-weekly options trade. I think if you want to take away anything from this, it's the $30 is the magic level for Intel. You can see that they have respected, it breaks down, it pulls back up, and then it just kind of breaks down. And the $30 is, I think, has been this level for a while now for Intel. And unless there's a catalyst on either side, whether the company is going down the drain or they come up with some innovative product, I don't see any news that can break up, have a breakout for Intel at this point in time. So if it trades sideways, I think keeping $30 as a level, if you do options trading, I think could be a good way for an entry point, and then a good way to trade, because this level has been being respected on a pretty long scale now. Next week, compared to SOFI, the options expiration at 32 is 21,000, and at 30 it's 32,000. So you can see even on the option side, you have a lot of data at $30 level, because that's just has been a standard level for a while now.
So this to me looks quite bullish.
Yeah.
I don't know if you had the same thoughts.
I kind of agree, Sean. Go ahead.
Yeah, there's just it's above. So the resistance that's been hit in the previous months, I can't quite see what those months are, just from an accuracy point of view. But you can see in the recent one, we just bounced off really the 50-day moving average. We're at that fib level of, again, about 30.18. So you mentioned the 30 level. Even though it's a red candle on Friday, it still looks like a fairly bullish red candle, or less bearish, shall we say, than what it could have been. But yeah, I see actually positive momentum for Intel.
Yeah.
Don't know what you're thinking about, Nate.
Yeah, I was going to say, you draw a trend line from that most recent low, which is back in March, and it looks like it, ignoring the blip that just happened recently, the big drop down, that trend line kind of traces right on up to where we're at and would hold where that 50-day moving average is, and right around that 30 level, which was clearly prior resistance, and now looks like it's support. So yeah, I'm wondering if we've got a new range here to trade between 30 and 34. That'll be interesting to watch. Yeah,
I mean, if you day trade, I think that could be a pretty good range for you too, because on options I cannot, on options it's a weekly expiration, so I think getting in $30, and if you get it, then you sell it at the money at $30 itself, and the premium is your benefit, is the profit that you make.
Yeah, you're talking about selling the cash secured puts there.
Yeah. So because I'm an options trader, I just buy using CSP and sell using covered call.
Oh, so you never buy shares with the intention to sell. You get into your shares using cash secured puts, and that's how you actually
Yes. That, I mean, I just trade options, day in and day out. That's pretty much it. However, I sometimes do open options and close the options on the same day. Depends upon the stock.
Yeah, that does make sense. I'm following you there.
Yeah.
Yeah, it's a great trade in Intel. You've got my attention. I mentioned that to you earlier before we got on the call here today. Like, I was not paying attention to Intel, and you've got me squarely looking. So
Listen, you get me
Me
on
too.
Mara, I got you on Intel. There
we're
you go.
just sharing ideas here. I love it. Sean showed us the way with Palantir. I mean, here we go. So we got one more left, right, Kay?
Yes, and this is the blockbuster of our find, right? So I think one of the things. By the way, I did not have any trades in place. This was just for our purposes, and I know the screenshot looks a little bit bad on this one, but we have been talking about GitLab for a couple weeks now, right? We have been looking at this trade. We have been speculating. We have been our hypothesis was that if they talk about AI, it's going to break the $43.
Yeah.
And after hours, they reported AI, I think like 10 or 15 times during the earnings. It did break, and now it's sitting at, let me see the number exactly. I think it's right now around the 46.61. The earning per se was not that great, but nobody is listening to the earnings. Everybody is listening to the AI part, and that's what pushed the stock higher. Now, if you are going to invest, by the way, I'm talking from an investment standpoint. If you're going to invest in GitLab, I would be careful investing in this company. Why? Because they are not a profitable company like other stocks. Yes, it's on the AI hype wagon, but from a trading perspective, I think I'm just going to stay clear. I just found this a good trading opportunity, and I wanted to test my hypothesis along with you guys. I know you guys, provided your thoughts on this one. It worked out well. I think it's going to trace back because the street will quickly realize that, hey, listen, the hype is over, and let's get back to see the fundamentals of the company. It's not profitable yet. So that's my take.
Yeah, the trend line that if you go back to that November high point and you draw a trend across the peaks, we're now above that trend line. So it does look like it broke above that, but I'm with you. When you have no real positive earnings news and everything is just based on the AI kind of information or hype, it's not as strong of a move, and I could see this being a bit of a fake out and pulling back. So I agree. It's definitely positive to see this move. It was a great trade you highlighted, by the way. I mean, really great trade. But I'm sure Sean can speak to that. But yeah, at this point, I think it's again, take your profits and wait and see.
Yeah, for me, this one, I played the lottery, I must admit. I played a very, very small position. You can do that. And I was willing to obviously lose the whole trade, of course. And I had it in my head that 10% loss, 10, 15%, most earnings generally, I think, of kind of 5 to 15% gain or loss with these kind of smaller market cap stocks. And I honestly, I probably got lucky. So, yeah, I made quite a lot of gains, I guess. Relative to the amount I put on. And Kay, thank you very much for that, of course. I took the risk. It's my risk. It's my due diligence. I had a look into balance sheets and all that kind of stuff beforehand. So I made that decision to go long, and it paid off. But yeah, no, obviously with high risk, so it's not recommended, of course.
I think that's a great point, though, Sean. What you just kind of highlighted was we touch on probabilities and potential setups, right? But this one in particular was a high risk, high reward, and it could have very easily gone the other way, especially given the earnings report numbers, right? But that was the setup, so we highlight it. And if you want to take the risk, there's some risk involved. I think it's really smart what you said there is you understood that what your losses could be first, and I think that's the way you enter any trade. Understand what your losses are, size your position accordingly, which sounds like you did exactly. So that if you did, if it did go the other way, you weren't losing sleep over it. But it was a really nice potential opportunity to make some really good money, which, hey, worked out this time. I love it.
Yeah, no, this is amazing. And I think what you said completely makes sense, and I think it's for every listener on the call. And if you're trading, right, our role is to present opportunities that we see. Some of these trades we are actively involved in. So, for example, Nate does Mara every single week. I do Intel every single week. Sean does Neo and Palantir every week. So some trades we are always there. So we have a much better take on it. Some stocks like these that we find out and say, okay, you know what, we're going to track it for a couple of weeks and see how that trade plays out. But yeah, always do your due diligence, right, in that aspect. Our job is to present some ideas, and as Sean did his own risk management and risk tolerance, and then he played well. Congratulations on that, Sean. I'll try to keep up. I'll find some more new deals for you in the next coming.
Fantastic! Yeah, keep them coming. Keep them coming.
Well, guys, this has been great. Another great week. What I would say heading into next week is it's going to be quite volatile, most likely. So, personally, I'm going in with a little bit of caution. I actually am net to the downside if looking at my overall positions, but again, just for this week, given all the uncertainty, I think it's definitely worth taking a bit of a cautious approach. And hopefully last week you got in some good trades, and we highlighted those. We'll go through a few more next week and see how we did this with our coverage this week. And every Sunday, tune in and we'll do this again. We go over some of the familiar stocks that you're used to seeing, but we touch on whatever we see that jumps off the page, like GitLab did last week. So thanks again for that, Kay. So that's all for me. How about you guys? Any parting words before we wrap up?
Okay, I'll let you go first this time.
Yeah, well, I'll all say, with so many things coming up next week, I'm just going to stay put. I'm not going to be actively trading. If you are into options and you want to get into options opening contracts, I think a good idea would be not to try the 16th and maybe look for the week following or 2 weeks, 3 weeks out. That way, if anything happens, at least you'll have enough time for it to recover. So I'm not going to look for any expirations of June 16th. That's just how I'm looking at. So we'll trade safe, and hopefully you make a lot of money next week as well.
Yeah, just for me, the kind of don't force trades. And if you find yourself for trades, take a step back and consider learning a bit more about the markets, to learn a few more indicators. Just go back on your trades. Take these kind of few days off. Let the market do its thing, and work on yourself before looking at the markets, and really get your confidence in tune in a way, so you can come back the following week with a little bit of attitude and get go.
You know what I'm noticing? I was like overly bullish, excuse me. I think it was last week, like really bullish going into the week, right? And then how quickly a week changes. This week, I couldn't be more bearish. Like, I just feel like that's just me. I wouldn't run with that necessarily, because who knows? But I just find that very interesting that these markets have been so volatile, and there's so much information to trade on that week by week. I mean, I'm swinging pretty heavily. So yeah, something to note, I guess.
Yeah. And that's the fun about trading, right? Every single week is a new week.
Yeah, always something to discuss, something new to discover, always an opportunity. Back to Sean's point, to put a bow on it, don't force the trade. I mean, there's always another opportunity. So if something's not looking right, you just really want to get in. Oh, I know NVIDIA is going to break out again. We'll wait for it to show the right signs and look for other trades in the meanwhile, right? That's all part of the process. So your account will thank you for that. I guarantee that much. So, All right, guys. Well, another great week. Thanks again for joining us. If you have any follow-up questions, make sure you ping us on Twitter or here on YouTube. Both Sean and Kay have great channels here, and we'll continue to provide this value every week. Thanks again for tuning in.
Thank you, guys. Take care.
See you guys.